Good morning, everybody. Happy Monday. It is October 16th, 5:27 a.m. Central Time. Grain markets just a little bit higher this morning. Fairly quiet overnight session. December corn futures up 0.75 cents at 4.94. November soybeans up 3 at 12.83 and a quarter. December Chicago wheat up 7 at 5.87 last trade. December Kansas City wheat up 3 3/4 at 6.72 3/4. December spring wheat up 3.5 at 7.25 1/2. We did have some positive demand news out on Friday.
USDA reported flash sales of U.S. SRW wheat, soybeans, and soybean cake and meal on Friday. U.S. exporters sold 181,000 metric tons of SRW wheat to China for delivery during the current marketing year. Exporters also sold 117,300 metric tons of soybeans to unknown destinations for delivery during the current marketing year. And exporters sold 100,000 metric tons of soybean cake and meal to unknown destinations for delivery during the current marketing year.
I'm not going to read too much into the soybean sale or the soybean meal sale. The SRW wheat sale to China is interesting. This is the second flash sale of SRW wheat reported to China since October 3rd. The two sales total 401,000 or 15 million bushels. So U.S. SRW wheat is very clearly competitive on the export market, whereas maybe HRW wheat is not. The thing about wheat exports is that the bar is set very, very, very low. USDA projects that we're going to export only 700 million bushels of wheat out of the United States this year. That would be the lowest total since like the mid to early 1970s. So U.S. wheat is not what it used to be. We don't grow as much wheat as we used to. We don't export as much wheat as we used to. We're kind of just a residual supplier on the export market, which is something that may be in the process of happening to the corn and soybean export programs as well. But I actually kind of read this as something that could be positive. Like the bar is set so low. Therefore, if we start to see an improvement in sales, maybe it wouldn't be that difficult to hit or exceed USDA projections. Following these SRW sales, the SRW futures contracts have acted much better relative to, say, HRW or spring wheat futures. So I don't know. I mean, it's tough to be real friendly wheat here. The charts don't look good to me, but some of the fundamental stuff, especially if you continue to see this business, I suppose it's encouraging. It's not bad news, I'll tell you that.
U.S. corn export sales declined last week. Net corn sales of 36 million bushels exceeded traders' expectations, but they were actually down 50% from the previous week and 9% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net soybean sales of 39 million bushels exceeded expectations and were up 31% from the previous week and 68% from the prior 4-week average. China was the largest soybean buyer. Net wheat sales of 24 million bushels, a marketing year high, exceeded expectations. The print was up noticeably compared to the previous week and up 67% from the prior 4-week average.
The book of corn sales looks quite a bit better just during the last 2 or 3 weeks. We are now running 14% ahead of the same period last year. Now, USDA is projecting an increase of, I think, 22 or 23% versus the same period last year. So we're not quite on pace to hit USDA projections, but we're looking quite a bit better. The problem here now is soybean sales. The book of U.S. soybean sales is the second worst of the last 10 years. We're off like 31% versus the same period last year. China accounts for the vast majority of that lag. So the problem here, if there is a problem, I think is more so in soybeans than it is in corn. Wheat sales are running fairly close to where they need to be in order to hit USDA projections. So we need to see some soybean business. And how do we see that or better soybean business? Maybe you need a South American weather hiccup. Maybe prices just need to become competitive. But that's where I see the bigger problem emerging right now.
So if you guys are not already subscribed to our premium content, you need to check it out. On Friday, we did our biannual social media circus. This is where we comb through some of the most interesting comments on all of our social media platforms. Joe, do you want to elaborate on what our premium subscribers receive?
Well, social media circus is where Mackenzie goes through and picks out the most interesting social media comments, and then I get all worked up and flustered, and I start swearing and stuff because I get mad about what people say and things frustrate me. Maybe actually, there's a lot of informational stuff in there too. Brian was on, and I thought we had some good stuff on Friday. Report day also. The USDA was out on Thursday, and I do a snapshot on report day. So within like 15 or 20 minutes of the release, I have a video out to all of our premium subscribers with kind of the high level stuff regarding the report. If you guys want to see the premium stuff, we got a whole bunch of grain marketing type stuff coming this week. Chris is going to be on with me later this morning to discuss some storage and some other things. Go to standardgrain.com, sign up this morning. This is a $50 per month subscription. You can cancel it anytime, no other fee, no other obligation. Nobody will try to sell you anything else. Just a ton of info direct from us every single business day, guys. Check that out.
Heavy rains fell across portions of the upper Midwest this past weekend. Areas of Nebraska, South Dakota, Minnesota, Iowa, Wisconsin, and Illinois saw the heaviest amounts. Totals of 3 to 4 inches were observed locally. Areas further south saw lesser amounts. The Mississippi River at Memphis is a record 11.7 feet below normal this morning, although government forecasts indicate that levels will rise by nearly 2 feet during the next 7 days. While a dry 7-day forecast may limit river relief, the Euro model indicates that rains will return around October 24th.
So you're going to see a little bit of river relief, certainly some harvest delays where these heavier rains hit over the weekend. The government is now acknowledging on their website that we set a new record low on the river this year, 11.52 feet below normal on October 11th, which is not quite a foot lower than where we were last year. And then to round out the top four here, you had this year, last year, then 1988, which was a famous drought, and 2012, which was a famous drought. So I don't know if what we saw over the weekend, I don't know if it's all going to if it's going to run off. I don't know if it's still dry enough in those areas to result in a whole bunch of relief. But the government right now is calling for limited relief, and you hope that these rains come back in during that extended period, which is like 7 to 10 days out, which would probably be welcome. I know it would hold up harvest, but we really need that river relief.
Large money managers trimmed their net short position in the corn market last week. CFTC released weekly commitment of traders data on Friday. During the week ending October 10th, the funds were net buyers of 45,000 contracts of corn. They were net sellers of 6,000 contracts of soybeans, and they were also net sellers of 5,000 contracts of SRW wheat for the week.
So the funds are short corn and SRW wheat and closer to flat in the soybean market. We talked about this a little bit last week. When you've got so much carry in the market, it's very much advantageous for fund traders to be short. It's easier to be short. You get to roll your short positions into higher priced deferred contracts, and they can keep doing it as long as the carry remains. And it's a big advantage for them. So I don't know. This is part of the struggle with holding a real bullish bias right now is the carry in the market. Regardless of your opinion about flat price or fundamentals, the carries are just a built-in advantage for the short, and that's why I think you've got these big fund shorts in corn and SRW wheat in particular. And if funds were to go short soybeans, I mean, I know that the balance sheet's tight, I get it, but at the same time, there's a ton of carry, and it's a lot easier to be short in that sort of environment than it is to be long.
Oil prices surged 6% on Friday as Israel began ground raids inside the Gaza Strip. Brent crude gained 5.7% to end the day at $90.89 per barrel. WTI crude rose 5.8% to close at $87.69 per barrel. The conflict in the Middle East has yet to have any impact on global oil and gas supplies, as Israel is not a major oil producer. However, investors worry that the conflict could worsen and impact supplies from nearby top oil producing countries. Oil prices last week were also supported by the U.S. Imposing sanctions on owners of tankers carrying Russian oil priced above the G7's price cap of $60 per barrel.
So we've seen a lot more volatility in the crude. It's kind of found a home in the mid 80s, I guess, the way that it looks right now. These are headlines and news type items that we're probably going to have to be prepared to see like for years to come. Like this may be one of those wars that goes on for a while. So the volatility could go away. I don't know if the war is going away anytime soon, though. What did cattle do last week?
So on Friday, feeder cattle futures closed an average of $1.80 lower. Live cattle futures closed an average of $1.11 lower on the week. They were basically flat. Cash cattle trade gained some ground last week. In the Southern Plains, cattle traded at 182, which was a buck higher compared to the prior week. Up here in Nebraska, cattle traded at 186, which was $3 higher. In the Western Corn Belt, cattle ranged from 184 to 186, which was $1 to $3 higher. Box beef declined last week on the week. Choice ended the day on Friday at $300.80. That was down $1.21 for the week. Select ended the day on Friday at $275.49. That was down 29 cents on the week.
Outside markets to start off the week, US dollar is just a little bit lower. Stock market is marginally higher. Bonds are off a full handle, which means rates are up. Gold's down $12. Crude oil is barely changed at 87.73 in the November WTI contract. Have a great week, guys. We'll talk to you on Tuesday.